but for teams. Vani, can you start with your introductions? Vani, are you there?
Oh, I'm so sorry, yes?
Yeah, so I've introduced myself. It is your turn.
Oh, cool. Hi, everybody. My name is Vani, pronounced they, them, going fabulous. All the best with the round.
Thank you. The trainee, Baroness.
Good day, everyone. My name is Baroness Maria, but you just can call me BM, and I'm a trainee for this round. Preferred pronouns are she, her, they, them. Thanks.
All right, great. I will give some time to the government team to do introductions if they want to. Team on Gov.
Hi, Amy going first, Cavan going second, Shaun going third. Cavan going to reply.
All right, the team on Op.
You guys, I'm speaking first.
I am Mikko. I'm speaking second in reply. Tobi speaking third.
Okay, cheers.
All right. Thank you for that. Without further ado, on the motion about China and India, can I have the Prime Minister to start us off? Here.
Hi, can you hear me?
Yes.
Okay, cool. Yeah, PY's in chat. I'll just try to take one whenever I can. Oh wait,
How is that at McDonald's? Oh my god.
wait, it's only 3:10. That's already. Oh, whatever. Someone will get it. Okay. Okay, starting. I think we can all agree in this debate that India probably wants to substantially empower its economy and become a globally very dependable and stable economic actor, right? I think that's the outcome we all probably want, given that in doing so, you'd also just create a lot of good for people in India and as well as the region. But the problem right now is that India doesn't have a lot of good options for investments, especially with the West kind of on decline and not as willing before to connect with India as China is right now, which is why I think China is conversely a good option for India instead. And that's kind of the thrust of our case. As long as we can prove that there aren't going to be significant negative like military or economic repercussions stemming from the border issue or whether it's just China-related issues, I think we win this debate clearly. So just to clarify on what we're going to on side gov, by significantly reduce the restrictions, we mean take steps to make China like basically a similar level of economic and trade partner as before the sanctions, and also as well as compared to other foreign investor countries as well, right? So you lift the sanctions, tariffs, etc. I think if it's in an area that's sensitive to national security, like maybe military or intel related stuff, you can probably impose some restrictions there. But I don't think that's out of any ordinary situation, because that would still be the case even if the sanctions hadn't happened. So two things in this speech. Firstly, why India restoring economic ties with China would be good for their economy compared to other options. Secondly, why this helps Indian security and regional security to a degree as well. So the first thing then, on why is this actually good for India's economy? There's a few reasons to this. The first one being that the West is on decline, and in a sense, like there's an incoming recession, as we can kind of already see right now with interest rates going up in a lot of these countries and many companies in the West downsizing already, right? More on that later because Kevin knows things apparently. So I think it's also hard to do business in India, and it has been hard to do business in India in the past because of a lot of bureaucratic restrictions and red tape on foreign investment. For example, ownership restrictions, right? Because apparently, like one Indian dude has to have ownership over the company as well, and this kind of thing has driven Western investment away because it's been very risky for Western actors to invest in that kind of environment. Whereas for China, they have actually been willing to play ball with that because they have so many other investors. Anyways, also, I think an additional reason is India is a pretty huge market, and that's why China doesn't have the same issue and is willing to actually take that step and invest in India. And additionally, then they also don't have the same issues of like values or liberal ideas of like fairness and human rights, whatever, as the Western countries do when it comes to investing in other countries. So that's overall what makes China a really good and crucial partner for business compared to all the other Western countries. I think there are also furthermore some pull factors as well. well. As opposed to the West, China is very geographically like well positioned to do trade with India. You can also like lower therefore transport, shipping costs, cost of exchanging human and intellectual capital generally overall will be lowered. I think China has also recovered its economy very well compared to the Western countries, right? You can see Shenzhen becoming a very burgeoning hub for business in Asia, the Greater Bay Area. It's also a leading actor in developing green energy. All of these are very front-facing, like forward-looking economic aspects that I think India can align itself with very well and sees as a very good thing to be associated with, right? It's in line with what they want. Like, for example, they recently just announced that they have major economic ambitions to recover and also become a hub in Asia as well. I think also given that there's a huge population boom in India, there's a structural problem that there's not enough capital to go around in the country because of development and bureaucratic issues and limits, which is why they exclusively need FDI from foreign actors. And I think in this case, because of all the structural reasons on why the West is declining or not a good actor option, China is the better option here. What's the actual good that's going to come about from this option, right? From doing like business more with China. I think again, you saw you are able to deal directly with the issue of poverty in India, where literally millions are suffering. I mean, there's like 1 billion now. So also in a sense, because you have a more stable and like economically viable India, that's when you create more stability in the country overall as well as regional stability, right? Why is this the case? Because I think a stable Indian economy is precisely what's going to bring actors like Modi to heal or at least tame them a bit more or make them more amenable to the global environment, right? I think at worst, what you get therefore is an economic strongman in Modi as opposed to a military strongman, right? That's precisely because when your country is like, when your people can actually eat and are economically viable, that's when you are less likely to resort to things like using hatred to like fuel violence against Muslims or like conflict with Pakistan, etc. These things are less likely to flare up at the point at which your country is a lot more stable economically and it's growing. I think you're also likely at the global level as India to play ball with like other global actors when it comes to like the Ukraine war, for instance. Again, all comes down to your country's national stability in India as well as regional stability, thanks to India's economic growth. Okay. The second thing then on actually ensuring greater security in the region. So I want to just mitigate here a bit. Like, why are the border issues not going to be that problematic or significant in the long run, right? Because this border skirmish thing with China, I think it's pretty clear that China's had the advantage in the past and present as well, militarily and like just capability-wise. So I think it's not going to be an issue that greatly compromises Indian security overall if you lift the sanctions, especially since Modi, I think, already recognizes that you can't make it a big issue anyways when the electorate don't seem to care as much about the whole border skirmish issues, which are very far away and distant from everyday average Indians' lives on the floor, on the ground. I think you can't, it's very clear to Modi that you can't really sustain this border skirmish issue militarily or economically. I think these structural issues make it so that this policy of like putting sanctions as shown by the info slide was more of a reaction to the ongoing like happenings back and forth in the border skirmish. It wasn't a long-standing like hardline policy on what they want out of the border issue. I think it's very clear that this they would weigh the economic stuff as much more important than the border issues in the long run. Why isn't China going to be an aggressive or like exert a lot of influence over India at the point at which we restore ties with them? But before that, is there a POI?
How does China, that is still in the middle of an internal debt crisis, have all of this free capital to spend in India?
Okay, I think at the end of the day, even if you have an internal debt crisis going on, this is pretty much the case with a lot of other countries anyways. I think at the point at which FDI is recognized as still an important way to boost your country's economy, there's still something China is going to be interested in. Why isn't China going to be aggressive or try to exert influence over India in like pernicious ways? And I think there's a few reasons here, like three. First of all, I think the first reason is obviously China like trying to be aggressive in a sense, it's going to inhibit economic expansion in India because he will face backlash and also a lot of resistance from forces in India as well as the Western world, right? The second thing then, again, trying to bring India under your sphere of influence as China will trigger Western countries, right? For example, because even for the West, India occupies a strategic location, right? So I think it will deter China from trying to take ports. The Indian Ocean is a very strategic avenue for Western countries to enter into as well. The third reason then, I think India overall, these border skirmishes, it's well outside China's geopolitical strategic policy anyways, right? For China, there are two things that are really important to their national security policy and identity overall. The first thing being the reclamation of old glorious China, right? The whole idea of century accumulation, that makes things like the South China Sea and Taiwan the main security and foreign policy issues that China cares about, not really the border skirmishes with India. I think they almost take it as a joke anyways. The second thing, the global influence, right? I think China obviously wants to exert global influence. If you attack India and start conflict, I think that creates a lot of noise and a lot of controversy because especially, even though when it comes to South China Sea and Taiwan, China is seen as aggressive, that's because they see those things as their ground, that their home ground. Not saying that it is, but that's how they see it. But on other issues, in all other global avenues, China's really trying to play ball, right? Whether it's joining the WHO, being more active in it, being more active in UN. I think at the point at which on our side, you have more trade ties with India, then you create less reason for China to want to disrupt India anyways. Proud to propose.
I thank the Prime Minister for the speech. Can I invite the Leader of Opposition to start off the opposition bench? Here.
Hello, can I be heard? Yes. Great. I'll take POIs in chat. Starting my speech in 3, 2, and 1. Easing restrictions on Chinese investment will kill domestic labor in India and will massively expose their economy to systemic risk. Setup. What are the restrictions that we would keep in place? It's either all the restrictions, like one on ownership of firms and land through Chinese capital, because it crowds out American and European capital, especially since America restricts investments on Chinese corporations who now enter India. Secondly is restrictions on interactions with Chinese firms that pose a security or copyright risk. And thirdly is to reduce trade with China in general and divert it to deals with other major partners, like how they intensified the role of manufactured goods in the United States and how they now have far more raw resources from other African states. There's no guarantee that China will tend to your needs. Generally, India is growing rapidly. It's soon to become the third biggest economy in the world, and they have many sources of domestic capital, as well as a huge export market and huge labor market. Now is not the time to risk your economy by drastically exposing it to Chinese risk and an uncertain giant. 2 rebuttals to Gov. Firstly, on security. The easy thing here to point out is that extensive trading with China is a cornerstone to their military strategy. Look at how China, after ramping up Filipino investment, built military bases on the Spratly Islands, or how after being Taiwan's main trading partner flies ships and planes over the middle line in the Taiwanese Strait in order to threaten them. China uses this technology and this investment to get intel from you, as well as to decide the time and the date of when they can begin offensive relations. When they have control and leverage over you, it is much easier and safer for them to start things like the border conflict and kill Indian citizens. The second response is towards their point that the West is generally weak, where they assert a lot of claims. On comparative, the West is much better at dealing with things like the debt crisis and the economy. For example, on inflation, yes, the West faced inflation, but inflation in the United States is a third of the inflation elsewhere in the world because they have control over economic institutions like the World Bank and IMF, and because they've had far longer time as first world countries to diversify, build up foreign currency reserves, and so on. What Gov cannot contest is that China is still facing massive amounts of growing pains through its local government financing vehicles and so on that make it much harder for it to deal and recover from these crises. Argument 1. The restrictions vastly benefit India, Indian manufacturing, and the rest of the world. Even if you trade with no one and you believe Gov's push successfully somehow that the West is totally awful, we'd rather have them invest domestically and not receive this investment from China. Why? First, some setup. What are the needs of India? India is currently nurturing a series of high potential industries like tech, construction, and BPOs. These industries, one, directly compete against the type of investment China specializes in, like their investment in factories, their investment in the construction of architecture like roads and buildings, as well as they share many features like having large labor markets and large export markets. While the Indian industries are promising, they need time to develop to not get outcompeted and outpriced by Chinese markets. While India's economy is growing rapidly, more than before, they need to protect themselves and defend against the already mature Chinese markets. Allowing trade and investment would have 3 effects on Indian economy. The first of all is that trivially, it suffocates these industries by outcompeting them, allowing Chinese corporations to not only defeat them because they're more mature, but also because they can do things like employ state subsidy to do predatory practices like price dumping because they have far more state support and can unfairly win on the free market. Secondly is that China also has a track record of stealing IP to take away competitive advantage from your industries, ensuring that you never have the capacity to outcompete them because they continue to steal and they don't have IP loss domestically, and because many of your research firms now never even begin because the risks are far too high. But thirdly and finally is that you're likely to get poor and exploitative deals. If Gov is right that China has many, many options, then India is not special if China can tap other labor markets like Pakistan or Bangladesh. So in reality, Gov is only offering them the worst deals at the worst prices that mean that Indian developers, Indian workers don't get jobs and opportunities. We let them grow on opposition bench. What are the impacts of our policy? First is that this gives Indians stable and sustainable jobs. It gives them the money to continue to put food on the table because money is staying in India, circulating there, and then going to Indian laborers. Even if they get substantially more investment, the problem is that it doesn't trickle down to people. Domestic employment is a prerequisite for you to access basic services because you need income to survive. Secondly is that it improves the quality of life of people drastically. They move up from manufacturing, from hard work in the fields, to moving up to electronics manufacturing, to move up to service industry, where they face much less exploitation and better work conditions. So you massively improve their quality of life. But finally is that when this domestic Indian industries have improved, they can eventually compete against China in the long term to give better prices and better electronics
electronics, better goods to every other country in the world, substantially allowing them to compete over investment and benefit the third world. Weigh this argument. One, versus their benefit. Maybe they say China as a trading partner has some benefit, but we show that the specific ways in which they trade and invest in you have little comparative benefit, given that you want to nurture your own nascent industries yourself. But secondly is that we care far more about the relatively poor and populous people in India who would now get access to better jobs, higher income, and economic mobility. But finally is that this makes everyone else in the world happy by giving them access to cheaper, better, and higher quality goods. The second argument is that trading massively with China exposes you to substantial amounts of risk, and we prefer trading with the West, which is mutually exclusive. Before that, I'll take a POI.
Sorry. Your case defends that India has nascent economy investments. Would you support banning trade with everybody else in order to support these investments?
I mean, China is like your direct competitor. We're happy to trade with the Philippines because the Philippines isn't doing what India's doing. It's doing semiconductor manufacturing. America isn't doing what India's doing. India is doing BPOs and electronics exporting, which isn't to the same degree of the US. So I guess no. The answer to the POI is no. Anyway, even if you believe that engagement with India would be positive, the problem is that exposing your economy to dependence on them exposes it to substantial systemic risk. As we've already said, that the West is substantially stronger because of its position in the global economy and because of its time as a diversified and robust system. The government of China is, one, historically unreliable and sees you as a threat. The conflict in the Galwan River Valley happened while they were trading with you. So this gives the CCP leverage over you. So even if China is trustworthy, normally when you extensively trade with them, they get way more power over you and become unreliable. Secondly is, again, the looming debt crisis we POI that they don't have a response to. If they concede that there is a debt crisis, which they do in the POI, then all the Belt and Road loans that aren't getting paid back and all the real estate prices causing local government financing vehicles to collapse will come to collect on you and will cause your debtors, your people that are reliant on Chinese money, to collapse as well. But finally is that Chinese firms at any point could be blacklisted by the US or even China, like how Alibaba was blacklisted there, forcing you to give up investment there. Imagine if Indian cell providers expanded in China only to get blacklisted because they said something against the government, which would cause you to lose billions of dollars, hundreds of thousands of jobs, and millions in investment. Weigh this. China might collapse anyway, which is inevitable, but there's no need to multiply the contagion. And in periods of Chinese strength, allowing yourself far more exposure to them means that you don't benefit from Chinese strength. You are put at the disadvantage to it. And that's why you should not expose yourself to China, and you should keep these restrictions up close.
Okay, give me a moment.
Yeah.
Let me get my paper. I would like my POIs in chat, please. Okay, I'm gonna start my speech. If it was true that the economies of China and India are similar, then they would compete regardless, and China would take jobs from India and take funding from India regardless of whether you're funded by the West or China. So that cannot be the debate. If this debate was about shielding nascent industries because India is an emerging economy, then this calls for protectionism and having no foreign investment at all. But their side supports the counterfactual of Western investment because the West is more stable. So that cannot be the debate either. I want you to note that the majority of their attacks against us are contingent on a very hyper-specific characterization of Chinese investment, that Chinese investment targets specific industries and that they are prone to risk. This might apply to a small subset or some subsets of Chinese investments, but it's not true for broadly all Chinese investments, that all Chinese investments only target construction and infrastructure, that all Chinese investments are debt traps that are prone to default. This is not true for all Chinese investments. We don't have to defend a world where only the worst kinds of Chinese investments from the worst firms are flowing into India. They have to be more charitable and debate the broad cases of when Chinese investment can actually help a country help develop. Look at cases like Vietnam that actually use Chinese investment to build up its technology sector and all of these other financial sectors as well. The next big push they have is that China has an internal debt crisis. So this means that they are an unreliable investor. I have 3 responses to this. The first is that even if you account for the failure of Evergrande, which happened like a year ago, the financial system is still doing much better than the Western countries that have multiple financial crises in a row. Look at how BlackRock literally had to bail out regional banks in the US because of the multiple failures in their banking system. We win on a comparative, even if China is doing like shit, they're still doing better than the West. But note, this debate is about private hedge funds and firms in China. This actually proves my point. It is because there's a failure in the Chinese business environment. That's why Chinese investors are looking outside of China. It's because there's a crisis of confidence within China where they're not sure whether the loans in China would pay off. That's why investors in China are looking for all their hot money to go outside of China, which proves our point that there is capital available to go towards India and that there's good capital available. So if you believe that there's an internal debt crisis in China, that proves our point. The debt crisis means that investors don't want to invest in China anymore. They want to invest outside of China. But the last thing I want to say, just as a trivial note, is that the debt problem in China is just not systemic. The Evergrande thing was a one-off situation because they didn't manage their liabilities properly, and all of the defaulted loans they made in the past have already had collateral put up against them. The risk in the Chinese financial system is not systemic at a point in which all Chinese investments is risky. Now let's talk about the economics. The BJP has made promises to the people of India that there'll be a global superpower in the coming decade. Modi's platform is largely built around this idea that he's the only person capable of pushing India's economy forward. Judge, the question you should ask yourself, therefore, is whether Western investment or Chinese investment allows India to fulfill that economic ambition. India's economy is not in a good shape for all of the reasons that they have identified as well. There's a booming population, but not enough infrastructure to accommodate this large population, not enough jobs. They are recovering from the mismanagement of the COVID crisis and also the banking system failure that happened 2 years ago. Global trends of nearshoring and protectionism means that factories are relocating outside of India and countries are reducing their imports from India. And also the rise of Indonesia and Vietnam means that there's competition from India. Given this context of India being in a struggling economic state, but still having economic ambitions, why is it the case that we need Chinese investments and not Western investments? We told you that the West is facing an upcoming recession. We told you that capital in the West is drying up. We told you that high interest rates suddenly being increased from a previously zero interest rate environment means that companies are downsizing and literally going to bankruptcy because they cannot pay their loans. We told you about the multiple bank failures in the regional banks and SFB. Look, if you don't believe any of this analysis that the West is in a weak financial position, you will buy this, which is that India currently supports Ukraine, which means that the West is willing to pull the trigger on sanctioning India or not providing any investments to India at any moment possible. So having Western investment is incredibly inconsistent and unreliable for 2 reasons. The first is the structural reasons of the West being financially crippled right now. And the second is because of the support that India has for Ukraine, which means that the West can any moment withdraw any of the capital that they have. In comparison, China has been working towards being the dominant currency. They've been developing the Greater Bay Area. They've been building economic connections. But the last thing I want to note here is that India is wary of Western investments because they are worried about the neoliberal conditions or because of the human rights attachments towards them. And all of these things doesn't gel very well with Modi's Hindu nationalist platform because Modi's Hindu nationalist platform has anti-colonial sentiments that doesn't gel very well with accepting Western investment. So they lose this debate at the point in which their counterfactual was they wanted Western investments because they can't fiat away the Alibaba policies that are in India right now that mandate that any Western investor has to have 50% ownership and the other 50% ownership has to come from India. They have to explain to us why the political environment in India would suddenly be one that's accommodating to Western investment when they have historically always shut out any form of Western investment. This proves a very simple burden. China is one of the only sources of investment and trade. We win this by a landslide. We don't even need to prove that China is very good. We just have to prove that they are the only option available when the West is no longer present. What does this investment do? It builds domestic businesses and helps them expand and develop all of the things that David wanted as well. But note, it helps with construction and building infrastructure. So when they said that Chinese investment was primarily targeted towards construction, that proves our point. India has a booming population where there are overpopulations in the cities and because of rapid urbanization. All of this Chinese construction investment would be super good at displacing the rural, dealing with the people or the urban homeless because of the rapid urbanization and deals with the rural poor and all of the inequality. Before I move on, I'll take the POI.
You just said our characterization of Chinese investment in construction and tech was selective.
Oh, yes,
but these are the precise ones that caused them to, fall into debt and poverty.
Sorry. Oh, sorry, I didn't catch the POI. Can you say that again?
Oh, these are the precise characterizations of loans that we use. Investments in construction that price out Indian firms. So you're basically conceding that even if investments are a particular characterization, you agree.
Oh, but the construction scene in India is actually not big. They're more in manufacturing and tech. So if you price out construction, actually the economic damages there are quite minimal. Okay, now let's talk about geopolitics. The thesis of this argument is simple. I'm going to overtime a bit because we have a bit of a tech issue. But the thesis of this argument is simple. Having friendly relations with China is more insurance for India with regards to national security. When they form economic ties with China, mutual dependency means China does not want to escalate. And this deals with their case, because their case was that China will start having investments in India and then there will be an offensive strategy where they start annexing India. I have 4 or 5 responses to this. I didn't label it very well. The first is that they're also relying on India to not escalate the border conflict. They're playing a game of military chicken where they don't want India to escalate, so they also won't escalate. The second is that they're reliant on India because India is the gateway to the Indian Ocean. They're also reliant on India to get the exports out of Asia to the West. The third is that China does not want to increase military expenditure because this takes away from their economic ambition. You know, Xi Jinping wants China to be entirely green by 2030. This requires a lot of capital. They don't have money to spend on another military conflict. But the last thing I want to say here is that the nature of Chinese politics is that not all territorial claims are equal. Taiwan and Hong Kong matter because there were historical claims about restoring China. This is just one of the many border disputes that China has had in its portfolio of border disputes, which means that they do not care very strongly about it. Like if you look at the news and what's happening on the border dispute, right? Like China's playing music on the border to like kind of annoy the Indian soldiers on the other side of the border. So clearly this is not something they care very strongly about, where they immediately start being offensive and annexing the entire border just because India plays nice with them. There are many incentives for China to not do such a thing and not use an offensive strategy against India. For all of those reasons, extremely proud to propose.
In the DPM for speech, can I have the DLO, please?
Hello, can I be heard? Oh, where's my phone? Oh, is that? I'll get it. Okay, thank you. Is your phone? It's all good, it's all good. Let's go after this. Why you even make me move it?
Sorry, I'm sorry. I'm sorry. I'm sorry.
All right. I'm ready when you guys are. Yeah, sorry, just want to make sure. Audible?
Yep.
Okay, cool. I'll start my speech in 3, 2, 1. I think the approach on Gov is incredibly simplistic, i.e. they say the West is getting weak, China is strong, and therefore we should pick China. If the world was just one where we could pick the relatively stronger superpower, this would be the simplest debate ever. But that's not how the world works. Oftentimes, it requires an exact calculation of how your economy is going to particularly interact with China or the US. They give very few structural reasons for this particularity, and instead just say the West is declining, which again has very little proof, by the way, and that all our reasons why China is declining are not real. And I don't think it's a very engaging debate. So the first thing I'm going to explain is why Western economic structures are more likely to be attuned to India's economy. The first reason is that India and China have the same economic problem, i.e. that they have too many people, as PM mentions, and they need to move a lot of people from poverty to higher income. The problem here is that I think the good side to us is that I think the West has the opposite problem. And the West, again, is not just the US. It is multiple different countries within Europe. Heck, there are alternatives as well within Asia, i.e. Japan, Korea, etc. A lot of these countries have aging populations, need particularly skilled labor, or have populations where the labor they have is asking for too much money. The problem with China is what they're going to try and do is try and put their own laborers within Indian companies, which is precisely how they've done deals in Southeast Asia and why we have not been as able to employ after dealing with China, because they need to solve their own problems with this oversupply of labor. Whereas the West needs cheap labor and the West needs more labor, precisely because the concern of the aging population. So as a matter of whether or not this is going to be beneficial, I think it's more likely we get Indian people hired. Even if they get investment, it's likely to still benefit Chinese people solely. Secondly, PM says they are geographically near. I actually don't think that's necessarily a good thing. The first thing to note here is David explains, well, a lot of the time, this kills a lot of nascent Indian industries, which takes time to build up. To which their only reply is,
Well, would you not say we should be protectionist instead? Huh? I think the problem here is they're just picking an extreme example rather than dealing with a specific case, i.e., there are other countries that have nearly as similar an economy that aren't nearly going to be able to outcompete and outprice dump us. And additionally, I think particularly with China, because Chinese subsidized firms are able to take a hit and therefore they can lower prices, kill Indian companies, then raise them back up when those Indian companies are dead, that makes it very dangerous. But secondly, this is a good thing because if you are a Western company and you want to sell to Southeast Asia, you want to sell to South Asia, oftentimes what you'll do is you'll manufacture in India and use an Adani Group port at the south border. What that entails is that you not being geographically near the West is actually a particularly good thing because what they assume is that imports in general are good, which we explain they're actually bad, but the incentive for investment is particularly greater, especially when manufacturing is likely to benefit Indian people as well. Thirdly, in terms of what industries you're going to subscribe to, they use some very weak appeal to intuition here. Well, if this is the same industry, then it's not the debate, which doesn't make much sense. There are three reasons it's particularly likely to be the same industry. The first is that they're geographically similar, which entails that a lot of the natural resources available to them are not going to be very different. Obviously, they're going to be regional differences, but en masse, I don't think you're going to have a particularly unique strategic advantage with a bordering country. Secondly, they say that Modi ran on being anti-colonial. That's just not the history of India. India has run on a history of being unaligned, but particularly with Modi, the Indian economy was particularly closed off to people around 2014, 2015. And when Modi ran, he said, I will open up the markets, particularly to Western investment that we have not been receiving for years. This is how I'm going to transform India. He ran it as a business populist that they claim. I think the important point here is that before Modi, the incredibly strong national sentiment and national interest directed Indian investment in Indian industries towards directly competing with China, not as an economic thing, but rather as a show of force, rather as a way to be able to show a sense of nationalism over their own bordering country. Thirdly, David points out a series of problems with China. They manipulate their currency. They steal your IP. The good thing about the US is they play by the rules. And so if you are a budding Indian startup that has a great idea, you are always afraid that China's just going to steal it and use it and sell it as their own. Whereas the West, because they care about their own patent laws, because other European countries are going to hold them accountable if they do this to them, are more likely to ensure that they're not going to do the same things. All these reasons show that I don't think this is a very good debate from Gov. I'll take the POI.
If China and India have similar economies and similar problems, wouldn't that mean that the investors are attuned to knowing how to fix the problems and sympathize with those problems, making them better than the Western investors that don't understand such problems?
This is yet another appeal to intuition. You have to fill that middle analysis. How are they going to fix that problem? How do they become attuned? You can't just say that, well, if they do this, they've probably figured it out already. They're pretty smart. I don't think that's very good debating. Secondly, you know what? Let's play ball. They just assert the US and the West is in decline. Three counter assertions, right? One, US inflation is 1/3 of the rest of the world. The actions of Jay Powell and the Fed have strongly curbed this economic crisis that they're so scared of. Secondly, even if that's true, the US has large control of significant Western financial institutions that keep their economy afloat even through hard times. The IMF and generally Bretton Woods institutions, which is why we were not afraid of the US not having to raise the debt ceiling because you know that they'll do it. And you know for a fact that the reliance on the dollar means that they can continuously take loans even if they're not going to be they'll be good for it, precisely because the whole world relies on the dollar, precisely because they have control over such powerful financial institutions. Thirdly, the West is not just the US. You have so many different alternatives here that are all competing. But I think what David points out is that this crowds out that investment. Why is Chinese weakness more likely to be structural on their side of the house? Three reasons. Number one, they lent out so much money during One Belt, One Road, and a lot of them to companies and countries that were not able to pay them back. That initial capital cushion that they say existed is no longer there because they agreed to incredibly poor conditions. So even if today the conditions are better, the conditions in the past means they have no money. Secondly, localized government financial structures where local governments are unable to collect tax, but they have to grow their economy because tax directly goes to the CCP, means that they oftentimes have to take on debt and raise their GDP by building ghost towns that are unproductive. That's why there's so many villages, homes, and malls that have no people in them. Thirdly, they've been so much more scared about COVID. It took literal protests and still incredibly strong lockdowns before they're able to restart their economy. All of these are far more structural incentives than you being able to prove that. Lastly, on security, I think you giving your industry has significant amounts of information where at the worst case, they can take crucial military and tech But secondly, in the best case, can actually just manipulate people and their whims, whereas what they've done in many countries by influencing the kinds of technology that exist here. At best, PM says we'll regulate this. Well, we tried, right? China is not the actor to listen to regulations. They oftentimes don't think foreign law is something that applies to them. There's a much worse way to be able to deal with them. For all these reasons and more, I think it's an op-win.
No, they're not.
Unlimited. Now it's limited. Yeah.
Hello, Tina.
Yes, I can hear you.
Okay, thanks. Once again. Starting in 3, 2, 1. I'm sorry Mikko doesn't think we debated well, but I think we did. I want to talk about security first because David opens with it, but I actually think this is already China has used their leverage against you. This is actually very they themselves point out that China got in a massive debt crisis that did slow tried to get these ports to recoup the losses. Theory. Even if it's true, I posit that India is strong enough and not reclaim money on India. That makes no sense. If you have a debt crisis, you need to go after your creditors from previous first, because if not, no court will let you take the money from the one who you just lend money to, right? So there's no chance of this being a problem. Not that if the debt crisis is time sensitive and presumably the loans that we now get are longer, that won't be an issue. That specific argument doesn't make sense. They say contagion, but contagion is just a risk in any party you take money from. Insofar as we point out that there's a bigger problem in the West as well, we think that there's similar contagion. But more than that, Cavan's argument went unresponded to. The argument that your interest now becomes less to be aggressive is more likely that you end up wanting to be peaceful, because what happens if you're aggressive against India is that you compromise investor confidence in your investments in India. Given that China is also trying to play global financial markets, it is highly likely that in that context, that will create more security for India, which is what they want. So on security, I think at minimum, we don't cause harm. And that was the start of David's speech. Let's talk about who supports the Indian economy then. And the first question I want to interrogate is whether there are alternatives. The first thing that they say is the West has money. I want to be very clear. The bar of our argument is not the West is going to go down in the dumps like 2008. The bar is because having your economy afloat, being able to extend the government budget does not equate to having money for strong overseas investment, which is necessary to continue the progress of the Indian economy. That proof for the West not having money, if you check your notes, is inflation is low. But inflation being low in the West is the result of interest rates being increased, which is the reason why there isn't Western capital to go overseas. So their proof cuts against the argument that the West is going to lend a lot. It might have a strong economy back home, doesn't equate to lending a lot. There were two other reasons why we told you why it was unlikely that Western investment was going to be the solution. One, because the West has strong militancy and activity against offshoring investments. There's a strong push towards protectionism in the West, which means they are unreliable as an actor. Second, the threat of sanctions. We told you two things. One, India's position on the Ukraine war being pro-Russia means that there is an inherent risk of sanction. That risk, even if it doesn't actualize, deters Western investment. But second, they want to talk about US playing by the rules. India doesn't play by the rules. So you are always at risk as an investor into India of being subject to these restrictions and sanctions from the West that would then hurt your investment. So the West is not a particularly viable option. Then they said, but there's money within India. Look, two problems. One, Indian capital is not state-owned, and consequently, if your Indian firms are competing with the rest of the world in order to compete for this money that the Indian investors have. Unfortunately, your rich people in India don't necessarily feel that degree of nationalism that everyday individuals who vote for the BJP might. Secondly, and this is important, the Indian financial sector is still recovering from the shadow banking sector crash of a couple of years ago. And that existed because a lot of the Indian financial sector is like shadow banks with weak financial regulations applied to them. That means that if wanting to get credit from these areas is very limited. The consequence of this is that if you want to bank on these alternatives, you're taking a massive, massive gamble. This gamble is important because both sides agree that there are millions of billions of people in the Indian economy to feed. I don't think it's good to gamble these lives. Yes, Mikko.
So there's still a pretty big gap in the case, right? How does China profit from building roads to nowhere and random infrastructure developments in India instead of doing the conventional things like, the factories that we're defending?
Yep, getting there. So will China exploit you? The first thing I want to point out is what Mikko might call an intuition pump. But if it's true that they want to set the context that China is in serious crisis, seriously vulnerable, one, if they don't push a lot of money into you, then the harm is quite minimal. But second and more pertinently, they cannot tell me that China is super weak and therefore like there's a problem, but super strong and therefore is in a strong position to exploit you. Because presumably in that context, you aren't in as much of a position to pick and choose, and India has a stronger leveraging negotiating position than they characterize. I want to be clear, when we talk about India being in crisis, that is a crisis insofar as they need to forward the economy and help people down there. But the Indian government has not historically been, super concerned about that to the point it's the foremost priority, which is why they don't bend over in front of China. They are not Cambodia. They are not your extremely poor LDC countries. I think that this is fundamentally different in terms of the leverage and negotiating power. But secondly, regardless, and this is important as well, India is special in its size and potential of the market, which means that China might have other options, but it wants to invest in India. And all of that creates a world in which India has the capacity to negotiate on relatively level footing. But let's take out the specific arguments because there were three. First, these are nascent industries. Okay, then protect by sector. We never said protect from all economies, economic investment. We pointed out that sector-based protectionism is what India has done. For the rest of the world, if it's really that problematic, they could also do it there. It's ridiculous to tell me that there's 100% or that significant convergence between their industries because these countries have different comparative advantages, have different historical economic trajectories. But second, they said state subsidies. Yes, but the problem is that this doesn't really work that well in India. And the reason for this in India is that 50-50 law that requires a significant proportion of the company to be owned by an Indian national, which means that profits do stay to a very significant extent. But also India also has been in trouble for subsidizing. I think they can fight China relatively on this. But they said steal IP. First, I think factually, China has a lot of court system that has a new court system that has appeared more reasonable. We are still waiting for this to come out, but I think it suggests that the IP problem is not that bad. But if it is that bad, why would they need this business activity? If you tell me that China is such a shadowy actor, presumably the capacity to engage in corporate espionage exists on both sides of the house. But here's the trade-off. Maybe it's true that China is exploitative and it's going to hurt you. The problem is that this ignores the specific nature of India, because India being that size and is too big to fail because of the sheer economic crisis, but also because of the sheer economic potential that will be lost. So if India really ends up being too beholden to China, what we suggest is in future, there's nothing in the motion stops me from reintroducing some degree of these restrictions if that is actually necessary. Given the strategic value of India, we think that what that means is that the West will help you, or even if you're breaking contracts, Indian courts are like quite captured anyway, and it's likely that they can then protect you. So there's no reason that we must lie back and take China and let the Chinese exploit us. The difference is on that side. What is structural is the lack of alternative capital sources to fund the Indian economy, and that's what we thought we needed to avoid. That's what we propose.
Okay, now wait for the speech. Wait when you're ready.
Hello. One sec. I'll take PYs in chat.
There's no faster way to get burned than staring into the dragon's mouth, and no more embarrassing way to get burned than doing it twice. The first question I want to ask is, why is China an unreliable and dangerous trade partner? I want to flag from the beginning that proposition does not clear their initial burden of proof. We point out that China is particularly dry of capital because a whole host of internal crises and failed BRI investments have left it illiquid. So it doesn't matter if they can offer you long-term debts, because it's not about the time horizon by which you can pay back, it's that China has no money to give you. Their strategy in response is to debate and parallel, counter-assert a bunch of reasons why the West is weak, to which we can assert an infinite number of reasons why the West is strong. The way you can resolve this issue then is through three different metrics from me. First, compare the extent and likely speed of recovery. So yes, the US is facing some inflation. It has that much more under control. It has a non-hostile and rapidly growing tech sector that has largely been unaffected by the inflation and even unaffected by the pandemic to a great extent. All of this is to suggest that all of the mechanisms available to the US are such that it's going to be able to recover faster and much, much quicker than China can at a more reliable rate. The second way to compare this is to talk about risk. Unreliable capital, even if China has it, is infinitely worse than a smaller but steady stream of capital from the West because of the massive opportunity cost of a collapse. And if you want to talk about intuition here, think about it. When SVB failed, it was immediately bought out because there is a robust and diversified network of banks in the US which continue to keep the money flowing. When Evergrande failed, every major Chinese bank was affected because they were all exposed to the same volatile property market. So it is a structural risk of contagion that China hasn't made significant steps towards improving. But the second thing to note about risk is that it's also about political risk. Let's say the best case happens and you are able for some Indian firms to infiltrate the Chinese market. The problem with that is that there's a limit to success in China. The CCP is never going to let you grow to such a size that you will be able to reasonably compete with its national champions. Even if you are the biggest cell phone provider in India, you will never be allowed to get to the same scale as Huawei. And that's the problem with Chinese capital. It's volatile and subject to the whims of the CCP that you have far less control and transparency over. The third weighing metric here is to talk about the nature of investing. We answer the question they don't, which is what will the Chinese money go into? When they say, well, it's not a debate about protectionism because then you can just protect the sectors that are important. The problem with that is that those are the sectors that Chinese money would flow into. So if you are going to protect every sector that's important, every sector with potential, then it's not clear why China has any incentive to invest in you. The more reasonable framing here is that you would have to make some concessions. Let China come into your tech market. Let China come into your manufacturing market, even if those markets have the potential to expand and be massive in the future. These are the kinds of concessions that we explain are particularly dangerous to make, especially when China's interests to a large degree overlap with yours. That's when you fail the competition. That's when you lose out on massive benefits. But even if you don't believe any of those three weighing metrics, here's the flip. Increased financial instability in the West only makes China an even riskier trade partner. Because the mistake of opposition is to assume that these two markets are separate, when in reality they aren't, right? When the US inflationary crisis happened, we also saw large suffering of Chinese stocks. Lots of Chinese businesses like Alibaba rely on technology and services that are provided by US companies. Their financial markets are intertwined to a great extent, as we point out over and over again. So just because the West is doing bad, that doesn't necessarily mean that you can bank on China as the next best bet, because China hasn't established itself as an independent and trustworthy actor. So if anything, all of their material for why the West is collapsing is value neutral in the debate at best. So at the end of this issue, what are you actually comparing, and why is there a lot of Western or at least domestic investment we can access? The first thing we point out is that the failure of Western firms, even if you believe their characterization, doesn't necessarily prove that there's no capital. All it means is that there's no interest or incentive to invest in Western firms right now. If anything, I'd suggest that increases the attractiveness of firms abroad and investment in places like India. So you have more capital freed up. Just because interest rates are rising right now doesn't mean people stop investing as a whole. There's a lower pool of investment. We explain why that investment is likely to go to India. But the second thing we point out is regardless of what happens in the West, they still have large control over the financial world, right? Like who gives you IMF loans, who decides which things can bail you out. These are all institutions which are largely still affected by the decisions made by Western countries, which is why, if anything, you ought to side with them. But the third thing we point out is that there's increased concentration of resources in India as the stable South Asian hub. As you see, like nations like Bangladesh and Pakistan become more unreliable, which is why the West is focusing on consolidating its presence in India as an increasingly interested in them. So at the end of this issue, what you have to note is, if you are unconvinced whether one actor is more stable or has more capital than the other, what you ought to be weighing on is the pace at recovery and the reliability of those actors. I'll take the POI.
The problem with trading off a small amount of money from the West is that small amount will never let you outcompete China or the West, so you end up behind globally. On the comparative, we have mechanisms to ride the Chinese tiger and stand a chance of progressing, whereas no capital is an external problem that you can't fix.
I'm not sure why China is giving you the big amount that you need, right? Because if China is willing to give you this money anyways, because you're blocking off the sectors that they want to invest in, you're not getting that money either. But also, when we say small amount, that's relative, right? It's still billions of dollars coming into a few firms that can be life-changing for one tech startup that is on the brink of discovering some kind of innovation that would allow it to become a market leader, like Infosys, for example, in the 2000s. Second issue then, let's talk about security and India's domestic interests. The Gov claim here is to suggest that interaction with China will moderate the BJP and Modi while at the same time raise the capital Indian firms need to expand. So engaging with the POI. I have a couple of responses here that take this out of the round. The first thing to note is that this relies on an unrealistic characterization of the BJP. So yeah, Modi might say he's anti-colonial, but he's also very anti-China. The reason we know that is because he was the one who imposed the restrictions in the first place. If anything, I'd suggest that Modi becomes more volatile and more militaristic, because he can use the influx of Chinese capital to justify increased spending on the military and drum up national fervor. He can say, oh, the Chinese own our factories, they're taking away our businesses, they're taking away the profits that Indian workers have made for them, and thus use that to win re-election. So he becomes more volatile. The second thing I'd point out is that economic interaction in this debate does not equal to stability. In fact, history has shown the opposite. It's a tactic of China to exert influence and prevent aggressive retaliation. When the shareholders of your companies are all Chinese, it's unlikely that they're going to support any attempt to get them out. We offer growth, we offer sustainability, and we offer stability. Side with all.
Thanks, I'll do it. I'll reply when you're ready.
Sorry, I'm just gonna grab my phone. Hello. Can everyone hear me?
I can hear you.
Yeah. Okay. Great. Before I start my speech, I just want to say I apologize if ever I came off as rude in the deputy speech. I'll be nicer now. I'll start my speech in 3, 2, 1. So I think the characterization in this debate is modeled by the use of very simple words like China strong, China weak, China big, China small. And in a way, I think that takes away a lot of the nuance, particularly from our side of the house. Because what we do is we introduce a series of reasons as to what are the likely scenarios that you have and what are the systemic risks we're introducing. Let's deal with the first thing, where in the instance that China is weak and they don't have a lot of capital, the first thing to point out is just the likelihood of this case versus their case of the West is weak. What they give is a series of reasons that the West is weak is because there's a looming recession, which I don't think they sufficiently prove, and that generally there's less investment, it's drying up. But again, not only is there a lesser series of proof here, but I think it's also prone to the same GovWhip rebuttal, which says that this is a timely issue, i.e., this is something that is just in the moment, but in the long term will not have a significant effect. What we do is we explain why China is likely to be weak and much weaker because of a series of reasons that are built on the nature of their economy, not just on timely events.
Based on just timely events, we also gave zero COVID. But we explained, one, that its nationalized nature gives a significant political risk if ever you find that this one company that comes from India does not agree with Xi Jinping. Secondly, we explained that a series of debts is what the Chinese government gave out in its expansion before 2020, and a lot of those debts have not been paid. A lot of those debts would not pay because of COVID. Thirdly, that local governments take on debt because they need to increase their GDP, but are unable to have their own money to finance because they give all that tax money to the CCP. I think all of those things are not prone to that rebuttal, are more likely structural in nature, and are more likely to prove that Chinese capital does not exist in the present. But secondly I think what we also explain is that there is a series of reasons as to why there are alternatives other than just the US. You have to explain that this is going to be a macroeconomic level of drying up. But I don't think that takes away a lot of the reasons that people still would want to invest in India that I think comes out from David, i.e. they're a huge consumer market. They have a highly technologicalized and advanced labor force and a pretty large labor force. They're a fairly cheap labor force. All of these things are independent of the nature of India. So the second thing I want to point out then is in the instance that China is strong, or rather, let's tie this issue. They say at GovWhip, if they're weak, that gives us more leverage. Sure, right? But I think David first points out that you are crowding out investment from other countries. And at PM, there's some way to explain why the most important thing is investment. So even if we're able to outcompete a weaker China in terms of our own economy, it's unclear why you're able to grow to a sufficient degree that they say is the most important thing in this debate. Secondly, if China is strong, what happens? I first want to look at the material that explains, well, why is it that you don't have enough, or rather the same kinds of industries being invested in? The problem with their case is, the more that they say we don't have the same industries as China, the less and less it becomes clear, what is China investing in? What industries are going to prop up? Because we give a lot of the strongest Indian industries like tech, like BPOs, even infrastructure. It's not clear what exactly China is going to give in the form of investment, if not a lot of things that are in their own industry and are going to outcompete Indian firms. Secondly, we explained that because of this similarity, not only does that mean China is not likely to give you the things you need, i.e. building up manufacturing sectors, which is what the West needs, because they need to be able to ship out to people in different places in Asia. They might use your ports, but China doesn't need to. They can pretty much do it themselves for the same places that gov names, right? Like if Shenzhen is such a huge manufacturing hub, it's not clear why you need India at all in this instance. Thirdly, I think what we explain is that a strong China is an awful trading partner. It is one that does not play by the rules, to which they say India doesn't play by the rules. Look at the comparative here. India working with the US, one where at least there's some degree of reliance that they can both work out some rules-based system, and you know the partner is going to have rules, rather than two countries that do not play by the rules and therefore make it impossible to trust each other, make it impossible to believe that you'll have a healthy financial sector. You guys not playing by the rules does not mean you're going to work well together. It means there's going to be more conflict. They don't weigh this piece of analysis. For these reasons, a weak China is one that is useless and you take out American investment. A strong China is one that is likely to bully you and make you far weaker. I'm very proud to oppose.
Any reply? Gov reply.
Okay. Give me a moment to drink some water. We're going to first talk about investments. So one part of their case is that Chinese investments are fair, and they give a bunch of reasons for this. So the first thing they say is that the economies of India and China are too similar. This is actually a good thing that your economies are similar, because if you have similar economies and stages of development and demographic, this means that the investors are used to seeing the same problems, for example, overpopulation. Therefore, Chinese investors would be specialized to solve such problems, which means we get more mileage for the amount of investments that we get compared to the West, which don't understand the structural problems that India face, and therefore the investments might not be fully utilized. So if it's true that the economies are similar and that they're in similar stages of development, this proves that there's a good investor to business fit. The next thing they say is that this hurts the economy because it will cause Indian nationals to lose their job. But this is contingent on Chinese firms coming to India and moving Chinese workers there. This is not how foreign investment works in all cases, right? Foreign direct investment can simply look like a Chinese firm putting money into an Indian business. It does not mean that a Chinese business has to move to India or Chinese workers have to move to India. So this rebuttal only attacks one variation of our case, where foreign direct investment means that Chinese manufacturing firms are moving into India and sucking up jobs. This isn't the only way that foreign direct investment works. It could simply be capital from China moving to Indian businesses. It was unclear why we had to defend large amounts of Chinese companies coming in, Chinese workers coming in, taking jobs away from India, but we also explained that there's a reason why this isn't going to be the debate, because there's a lot of hot money in China because of the internal debt crisis that they explained. So if Chinese investors have a lot of hot money that they want to invest in other things outside of China, this means that the primary investing activity is going to be investing into Indian businesses and not moving Chinese workers into India. Their argument here was that China will strong arm India because China has more leverage, which means that they'll force India to accept their businesses and invest their firms. But here's the catch. If it was true that China is illiquid, if it was true that China has a debt crisis, where does this leverage come from? How are they able to force India to move all of their businesses and move all of their Chinese workers into India in a world where they also claimed that China did not have the upper hand? Then they said that China steals IP. This is uncomparative to our claim that Western investors do worse things like impose human rights regulations or neoliberal policies. But also, note, this stealing IP argument only applies to tech firms with technology and does not apply to all industries. But the last thing I want to say here that really kills this argument about IP, right, is why will a Chinese investor want an Indian business to lose their IP? If you are an investor and your business that you're investing in loses their IP, you lose a shit ton of money. If anything, Chinese firms want to protect it. They never prove an incentive. They just said, Chinese firms, China, they always steal IP. These Chinese people cannot be trusted. But actually, the reality is that there's no incentive for investors to do this. The next thing they said was, China has a debt crisis. Look, I will admit this part of the debate is a shit show, right? We give you a bunch of reasons why America has no money. They give you a bunch of reasons why China has no money. Maybe at this point in the debate, what you're believing is both actors have no money. Here's how you're going to break the deadlock. The thing that breaks the deadlock is willingness. Because the West doesn't want to invest in the Hindu nationalist BJP that persecutes Muslims. They don't want to invest in India that's aligned with Russia. So even if the West has money because the inflation rate is 1/3, they're not willing to park their money in India, as opposed to China that doesn't really care whatever India does. But also, there isn't willingness on the side of BJP in India because of the 50-50 rule and the wariness of Western investments. So they can spend all their time giving us 6 counter assertions about why the West has money. They misidentified the important clash in the debate. It was not about how much money the West had. It's about whether they were willing to put the money into India. We proved to you comparatively why our side was better. Let's compare the last-ditch attempt at weighing that comes from GovWhip. They said that the West is a more stable investment. This is untrue. The investment is inconsistent because you might get sanctioned at a point in which the West is fed up that you're supporting Russia. But note, they never proved why stable investment was a good thing. Because even if we get sporadic investment, right, even if we get only $1 billion and then suddenly the capital dries up in China, this still benefits businesses in India that they can use this to expand. So us not having stable investment is not only untrue, but also doesn't really damage our case. The last thing I want to say here is that they said that China will be offensive. This is an under-analyzed claim. We gave you a lot of reasons about why China does not want to act in a belligerent way because it's not politically significant. But here's the catch. If it was true that China does not have money, that the capital is dried up, that there's an internal debt crisis, that the CCP does not have any political power, if that characterization was true, how in hell are they going to start a border dispute?
All right, I thank everyone for the debate. So I think the judges will be deliberating here. The rest of you can leave the room. First of all, shake hands virtually, and yeah, thanks for the debate.
Thank you.
Thanks, guys.
Thank you.
Can you just check if the streaming is on? Melvin. Is Melvin there? Okay, the rest of you, I need y'all to leave if you're not a judge. Yoshi Yao Kun, I need you to leave as well. Observer A. And Melvin. So to the panelists, I'll maybe in about 7 minutes, I'll just check on you on your status of your ballots for the panel. Right, it's been 7 minutes. Can I just check if your ballots have been submitted? Vani and Baroness. The trainee doesn't submit a ballot, right?
Yeah, I will not
Trainee,
have
I
to.
think, yeah,
Yeah.
I've submitted my ballot.
Okay. The trainee, have you submitted yours? You don't have a ballot?